hear ye, hear ye. Prepare thyself for the grand joust on the 15-minute battleground of E-mini S and P500 futures. In this medieval melee, armored price knights clash for glory and gold. So don thy helmet and let the tourney begin. Let's jump right into it. Key buy and sell levels, or ranges. Value area, high, VAH, 6,860, the Emperor's box. Acceptance above this is a sign of market victory. Value area, low, VAL, 6,842, the Lion's Den. A breach. Here invites a short, brutal battle below. Point of control, POC, 6,853, the Arena Center, where the volume crowd cheered the loudest. Support zone, 6,842 to 6,847, the Praetorian Guard's defensive line. Strong buying legions reside here. Resistance zone, 6,860 to 6,866, the Colosseum walls, a formidable barrier requiring high momentum to scale. Single prints. Escape paths. Lower, 6,838 to 6,841, an old tunnel. Responsive bids might ambush short sellers here for a quick retreat. Upper, 6,867 to 6,870, a narrow bridge. If price charges through, follow the momentum to higher ground. Market context. The current session's profile shape is a relatively balanced bell, suggesting the market gladiators are currently locked in a close, brutal duel, unable to achieve a decisive victory. Price has mostly revolved around the POC of 6,853, a classic sign of market indecision or consolidation before the spectacle. The extended trading hours, ETH, session has been a quiet skirmish, failing to push decisively beyond the immediate value area, like two armies setting up camp before the main event. The last 3 days' battles, E-mini S&P 500 futures. Day 1, November 30th. POC 6909, VAL 6902, VAH 6912. A high and tight formation, suggesting a strong bullish legion defending a high price point. Day 2, December 1st. POC 6862, VAL 6850, VAH 6870. The legions retreated, showing a clear shift in value lower, a decisive defeat for the bulls. Day 3, December 2nd. POC 6848, VAL 6842, VAH 6859. The battle settled into a tight balance, pausing near today's current VAL. Assessment. The price has descended from its lofty heights and is currently consolidating near a recent low point with a slight downward bias over the 3-day series. We are waiting for the next trumpet blast to signal a breakout, either a glorious return to the previous highs or a complete rout to lower levels. Today's POC at 6853 is the new line in the sand. Volume analysis. Cumulative volume delta, CVD. Breakdown. The CVD is our record of which side, the bulls or the bears, was more aggressive in their combat. Session open, CVD, negative 4,774 contracts. The day began with the bears having already pelted the bulls overnight. Intraday peak, buying CVD, negative 2,593. A brief, valiant charge by the bulls, momentarily closing the gap. Current CVD, negative 4,774. Wait a minute, the current CVD is the same as the open. This suggests that over the entire ETH session, the net aggression was perfectly equalized. Zero net change. A genuine stalemate. Intraday, low CVD, negative 4,870. A minor dip, where the bears seemed to almost break through. Interpretation. The CVD suggests a perfect, agonizing draw. Neither side has managed to inflict any lasting damage on the other during the extended hours. It's the trading equivalent of a pre-match stare-down. Any movement from here will require fresh, aggressive volume legions to enter the arena. We have zero net directional conviction from the overnight session. It's truly a coin flip. Risk management considerations. Like a Roman general, we must protect our capital at all costs. Long trades, entry zone, near VAL, 6,842 to 6,847, or a breakthrough above VAH, 6,860. Stop loss, a tight defensive below 6,841, the single print floor, or a disciplined 7-point stop based on recent volatility. Profit target, initial conquest at POC, 6,853. Major victory at VAH, 6,860. Followed by the high resistance zone. Short trades, entry zone, on rejection of VAH, 6,860 to 6,866. Or a breakdown below VAL, 6,842. Stop loss, a swift retreat above 6,867, the single print ceiling, or a disciplined 7-point stop. Profit target, POC for the initial spoils of war, then a full route to VAL. Position sizing. Never risk more than the equivalent of a single legion salary, 1 to 2% of account capital. If the stop is tighter, the position size can be slightly larger, maintaining the same dollar risk. Potential scenarios and trade setups. The market awaits the signal for the main event. Here are our battle plans. Scenario A, the glorious breakthrough. Acceptance above, VAH price. Gladiators breach the Colosseum walls at 6,860. Setup. Enter long, above 6,860 on confirmation. A 15-minute close. Stop loss at 6,853. POC. Target the 6,870 to 6,875 resistance levels on momentum. Scenario B, the brutal rejection. Failure at VAH, the market legions charge 6,860 to 6,866, but are brutally repelled. Setup, short on the first clear failure, a quick snapback into value from the high. Stop loss just above 6,867, targeting the POC then VAL. Scenario C, the rout. Failure at VAL price breaks the defensive line at 6,842 and sinks into the lion's den. Setup, short of break below 6,842. Stop loss above 6,847, the recent low swing. Target the 6,838 single print area, then 6,830. Scenario D, the strategic retreat and counterattack. Value bounce price dips into 6,842, but finds strong defensive buying support. Setup, long at 6,842. Stop loss at 6,838. Target the POC, then VAH. Smash the like and subscribe button. Click the bell to receive content notifications. Remember, the future belongs to the focused. Stay disciplined, stay curious, and as always, trade smart, trade strong, and never stop leveling up. I'll see you in the markets.